Hi, I'm Jeff Andrews, financial advisor with Harmon Advisors. Today we're going to talk about traditional IRAs versus Roth IRAs. So the main difference between the two is really the tax treatment on contributions and distributions. So with the traditional IRA, generally the money that you're contributing is deductible on your tax return, which means it goes in pre-tax or before you pay taxes. It's kind of like you're paying your retired self before you have to pay the IRS. Now, side note, if you or your spouse are covered by a retirement plan through your employer, then your deduction could be limited. Check the IRS website for current deduction rules. But once the money's in your account, it then continues to grow tax deferred, which means that as your account increases in value over time, you don't have to pay taxes on that increase. So when do you pay the taxes? You pay the taxes in retirement when you start to take the money out. And so let's fast forward, say, to retirement. You have a traditional IRA worth $500,000. And the first year of retirement, you take out $50,000. Well, you're going to be taxed on the $50,000 that you took out at whatever income tax rate you're at in retirement. Now, with a Roth IRA, you're essentially just flip-flopping the tax treatment on the beginning and the end. So those contributions now actually go in what's called after tax. And so think about your paycheck. With their paycheck, you're having income taxes withheld. And then what money's left over is now what you're using to make your contribution to your Roth IRA. So in this case, you're actually paying the IRS first and then paying your future retired self. Now, once the money's in there, it grows tax deferred, no different than your traditional IRA. But here's where the real difference is. And that's that when you retire, and so long as you're 59 and a half years of age or older, and the money's been in your account at least 5 years, when you withdraw those funds in retirement, all that money comes out income tax free. So back to our example of $500,000 Roth IRA, that first $50,000 you take out, you don't pay any income taxes on that withdrawal. In fact, if you took the entire $500,000 out, you wouldn't pay any income taxes on that either. And so that's it. That's the basics of a traditional IRA versus a Roth IRA. So when would someone use one versus another? Well, for a traditional IRA, you're generally going to look to use that if you feel that maybe you're going to be in a lower tax bracket in retirement than you are today. And so it's better to postpone paying income taxes. Or maybe you just want to lower your current income taxes. Traditional IRA is great for both of those. Now, Roth IRA, on the other hand, is really good if you feel that you're going to be in a higher tax bracket in retirement. And this is particularly true of younger savers who are maybe just starting out their careers. Or maybe you just want more control over your future tax profile. You know, we don't know what future tax rates are going to be. And so to have a pool of money that is totally tax-free gives you a little bit more control over that future tax profile. Another thing is that Roth IRAs are a great source of liquidity in retirement. You know, fast forward to retirement, maybe you need to make a big repair on a house, or you want to take a big trip. And a Roth IRA is a great way to pull out money for big chunks that you might need from time to time once you get into retirement. And since that withdrawal is tax-free, it's not going to have any adverse tax consequences or adversely affect your tax profile in retirement. And then lastly, you know, if it turns out maybe you don't need the money in retirement and you actually want to leave the money to your beneficiaries, because there's no required minimum distributions on Roth IRAs, they're actually a really efficient way to pass money from one generation to the next. And so again, that's it. The basics of a traditional IRA versus a Roth IRA. If there's another financial topic that you got a question on, you can reach out to us via our website, harmonstreet.com. We've also got a number of educational resources and tools available on the website to help you make great financial decisions. Again, I'm Jeff Andrews, financial advisor with Harmon Advisors, reminding you to don't have a car payment, take your lunch to work.